All right, guys, potential shift here. It is Thursday, July 16th. It is 9:25 a.m. I feel obligated today to include a little disclaimer. First and foremost, do not follow my trades, all right? Maybe I haven't made this clear before. Like every other retail trader on earth, I am not profitable. Even if I was, even if I was the most profitable trader on earth, I don't think following any other trader's trades, trade for trade, is the path to becoming profitable. Okay. That's not why I stream. I stream, number one, to find out if it's even possible to make a meager living day trading. Number two, nobody else does it, right? You've got thousands of guys out there who are making their picks and giving their magic formulas, and they don't ever show their trades, right? So it's like you've got all these guys claiming to be the Michael Jordan of trading, but none of them will actually play basketball on camera, right? It doesn't make a lot of sense. So, I'm trying to do something different here, which is, the opposite of what those guys are doing. I'm not bragging about how much money I make. I'm not saying I have the magic formula. I'm just actually showing my trades, and I happen to think that that's a lot more valuable than the dudes who are out there selling their courses, saying they've figured it out, showing their profit and loss totals without actually showing their trades. I mean, come on. Do you actually believe these guys? If you do, so be it. But I find the whole trading ecosystem to be strange in that, we all sort of trust that these thousands of guys out there who don't show their trades are claiming that they've figured it all out. Well, if you figured it all out, show your trades. That's it. Just show them. Show them live. All of them. Don't cherry pick them, right? So you're not gonna find the secret to winning here. There is no secret. There's no magic formula. Anybody who's trying to sell you a magic formula is full of shit. All right. What we are going to talk about is process, execution, controlling your emotions. All right. These are the core skills of trading. All right. And we can discuss them here. So if you want to talk about war stories, you want to talk about market conditions, if you want to talk about process, this is the place for it. All right. If you want to talk about picks, that's fine. My picks are as good as anyone's, right? Coin flips. Sometimes they work, sometimes they don't. But for the most part, I'm just trying to show my trades because nobody else does it. All right. But like I said, like every other retail trader, including those guys selling courses and saying they figured it all out, I'm not a profitable trader because the market is almost impossible to beat. But I am pretty good at managing my risk and staying afloat and treading water. Yeah, I'm actually pretty good at those things. So I've been doing it for 12 years, so I got to be pretty good at that. All right, with that out of the way, what are we looking at today? Let's see. We closed at 755 in SPY yesterday. Looks like we're going to open at 753 in a minute. Let's look at our 5 things to know from CNBC. Grocery sales, that's a bad sign. You don't want to start the day with that. Aisle cleanup. Okay, grocery prices went down a little bit. United Airlines beat. That's interesting. Wouldn't have thought an airline would beat with the oil prices, but I guess oil prices were kind of down a little bit towards the end of last quarter. Shares of United Health jumped. Okay, we are in earnings season. That much is clear. DC Dispatch, Warsh wasn't the only one testifying yesterday. Anthropic is scheduling meetings with investors. Looks like Anthropic is preparing its IPO. No date though. No date on the Anthropic IPO. All right, economic calendar. Thursday. We got retail sales, initial jobless claims today. We already had those. Home builder confidence index at 10. Home sales at 10. All right, so we get some home data at 10. Usually not a big deal. Tomorrow, no big numbers. All right. So for the rest of the week, we're not looking at much important data coming in. It's been a very tough market lately. I took yesterday off. Always a good idea. Got my head cleared. Had 4 losing days in a row. It happens. But you know what? They weren't terrible days. Lost $100 one day, $65 one day, $25 one day, $100 one day. These are not disastrous days, and that's what matters, okay? Like I said, I'm pretty good at managing my risk at this point. I'm fairly good at not having blow-up days, okay? And that counts big time, because implosion days where you go off the rails and, you have a few bad trades and then suddenly you're revenge trading, you're tilting. Next thing you know, you've blown through, a quarter or half of your bankroll. That's the main way you get knocked out of the game, okay? Implosion days. So you have to prevent those at all costs. So I've had a bad run. I took a day off, cleared my head. I'm also going to be rather selective in what I'm doing today, because this market it's not favorable market conditions right now, all right? Straight up. I made a stream yesterday, rather briefly, talking about bias, directional bias in the market, all right? Traders need directional bias. The more of it, the better, all right? People talk about volatility. You don't really need volatility, although often directional bias and volatility do go hand in hand. Volatility in and of itself can be a good thing if it's got directional bias, or it can be extremely dangerous if it's just volatility for the sake of volatility. If you're just bouncing, making huge swings up and down, those are days where you can get wiped out, right? So volatility is not exactly what you're looking for. You're looking for directional bias, all right? The market clearly favoring one direction over the other. That's how you make money, all right? And we just haven't had that lately. And more than that, we've had a market that's not respecting levels, okay? Especially yesterday, levels haven't meant much, all right? So we break a level. Normally, sometimes when you break a level, you get a run, you get some momentum past that, and we haven't been seeing that lately. What we've been seeing is we break a level, we move up another 50, 80 cents, just enough to rope people in, then we have a sharp pullback, all right? We haven't been running to the next resistance level, to the next liquidity node, which would make targeting your trades easier, all right? When you see a level break, usually you're looking for the next resistance level as your winning target, and we haven't been seeing that. So we've been seeing a lot of fake out moves, a lot of sharp, fast 1-minute candles that rope people in or clear out their stops, and then, again, immediate pullbacks. Been seeing a lot of that. These are not friendly moves for traders, all right? So we have to keep in mind that the market has not been friendly or forgiving for the last week, and sort of work on the assumption that it's probably going to be the same today. Again, I've talked about this. This is our 6-month chart up here. We've got a really nice flag forming. Really nice. Here's the top of the flag. Here's the bottom of the flag. So you got a really nice flag shape here. I think I've learned how to draw the... I did draw the Here we go. Here's the, okay. Trend line. Bump, bump, one. Trend line for the bottom. Bump, bump. Okay. There's our flag, all right, on the 6-month chart. This is the 6-month chart. So we got a nice flag forming. I think we're going to break out soon, one way or another. I don't know which way. I don't even want to venture a guess because honestly, I really don't have a preference, up or down. But I think when we break out of this flag, you'll see movement again. Whether it's up or down, I don't know. And when we're going to break out of that flag, it looks like there's still a few more days left in it, which makes sense because next week is the big earnings reports. So it would not surprise me if today and tomorrow, maybe even Monday, we're still sort of trapped in the tail end of this flag. And then maybe Tuesday, Wednesday, Thursday next week, we finally pick a direction. And once we do, I think we'll get some directional movement again. But until then, you know, this is just survival mode, all right? I'm not trying to break the bank here on days where there's no catalysts. Market has shown time and again that it doesn't want to move quickly in one direction. It wants to retrace. It's not respecting levels. Yeah, we're just trying to tread water right now. Stay afloat. Wait for favorable market conditions to return. And when they come back, hopefully we can recoup some losses, get into the green. All right. Anything worth looking at right now? SPY at 752. QQQ down 7 points to start the day. Interesting. It's 938 right now. This is our SPY chart. Where did we bottom pre-market? Pre-market, we bottomed 751. Pre-market, we bottomed 751. Yesterday and the day before, 750 presented some resistance. So you got a 751 bottom pre-market. You got 750 resistance yesterday and the day before. So I mean, if you're looking to get short off this move, this first move of the day, I mean, it's not clear exactly what your out is. Is it 751 or is it 750? I mean, you'd probably have to make it 750. If you want any sort of reasonable profit on the play. I mean, we're already at 751.7 right now. I mean, you could get short here, trying to reach for 750. Again, I'm not going to do that. It's too early in the day. I want to see if we're just going to start chopping around like we've been doing the last few days. And I don't trust this market, straight up. I don't trust that we're not going to go to 751, stop at 751, bounce back higher, which is what we've been seeing lately. The market hasn't been respecting the levels. So yeah, to think that it's going to go to 750 here, definitely possible. It's just, I don't personally like it as a play right now. I'd love to see a clean morning V shape, all right? We haven't even seen that in about a week, all right? A nice down move followed by an up move, all right? That sort of ends between 9:50 a.m. and 11:15 a.m., okay? a nice V shape, that would sort of reassure me that the market is back in a mode that is familiar to me, that is sort of respecting patterns and respecting levels. I don't want to look at this chart at 10 a.m. and see a bunch of zigzags. All right. I'd love to see a V shape. So honestly, if we go down to 750 and then we bounce back up to here, that'd be beautiful. Because at least it shows that, like I said, that the pattern that is familiar to me, that the market is behaving in a way that makes sense. All right, 951.2.3. $951.1. Been thinking about lately what makes a high conviction trade, right? What makes a trade that you feel really good about, versus a trade that's a hunch, You get 1,000 hunches a day, but what separates the high conviction plays that you actually truly believe in, besides just a nebulous, undefinable feeling, right? Because we all get that, right? You get a lot of hunches. Some hunches are a lot stronger than others, but if you're defining them by saying, well, this one's a really strong feeling and that other one wasn't such a strong feeling, that obviously has some problems, all right? That's a shitty way to define the difference between a high conviction play and a hunch, all right? Because you'll be able to talk yourself into, well, this isn't a hunch, this is a high conviction play, until it loses. And then you'll say, you know what? In hindsight, that was just a hunch. So you got to do a little bit of a better job of having criteria for what a high conviction play is versus a hunch, all right? So you can't, it can't be just, oh, well, I feel really strongly about this one. And one of the best ways to do that, I think, is you should have a very clear winning target in mind, all right? If you have a really high conviction play, it should be clear to you what your winning exit is, all right? It should be, you know what? I feel really good about this trade because I know the market is going to go to 749 right now, okay? I can see that. I can visualize it. I see where the endpoint is. I think that's a good differentiator between, I sort of feel like the market's going to go down. I kind of feel like the market's going to go up. I don't know exactly where, but I do feel like it's going to go up or down. That's a hunch. Now, if you can say, you know what, if we break this level, I know we're going to go to X target because that target makes a lot of sense. I think that's a good differentiator between like I said, high conviction plays and plays you just have a feeling about, okay? If you can clearly see your winning exit and you know what it is, that's probably a good play. If it's just, I have a bullish or a bearish feeling, but I don't know where it's going to stop, that's probably not a high conviction play. So I'm sort of keeping that in mind today. I want plays where I can see the exit clearly, where I have a target, okay? A clear target. If my target is ambiguous, that's just, I doubt that's a good play. I'm not going to say it's always wrong. I mean, I could see situations where the bottom falls out of the market and we're in panic selling mode and you really don't know where it's going to stop. I mean, I could see that situation sort of being an exception. But even there, honestly, if you feel really good about the panic selling, I think you should have a fairly good idea of not exactly where it's going to stop, but at least a target in mind of we will reach at least this level. I'll exit there because I know we will get to this level. So even if there's panic selling, I think you should have a clear target in mind. If you just have a bullish or bearish feeling, So this play, for instance, like, it's not a play. I'm not making a play, but if you were looking to get short here, do you have a target? Like my target would be 751 or 750. In other words, I don't know. I'm not clear on what the target is here. 750 would be the wishful thinking exit. 751 would sort of be the I don't trust this market exit. We'll say QQQ is really rocking and rolling lower. I mean, looking at QQQ right now, it's like, oh, we're going to go to 750. But it's easy to say now. We're like 3 points lower than we were 5 minutes ago in QQQ. What are the odds that this turns into a slaughter kind of day? Look, if we break below 750, I'll play it. That's what I'm waiting for, I guess. I want to see a break below 750. Target would sort of, it'd be 748. I mean, 748 is the easy target. And if we break below 748, well, let's not get ahead of ourselves, but if we were to break below 748, now I'd be more interested in the idea of this being a real sort of destruction sell-off kind of day. But we are a long way away from that. So, like I said, let's not get ahead of ourselves. Let's see if we can even break below 750, even touch 750, frankly. Now, if we shoot right back up here, I'm going to find that a little discouraging. because this bottom right here was 750.67. That's not a bottom you want to see. Again, that's a lack of respect for the levels if that's our bottom. Not a good sign. We broke below 751, which could have been a level. Reached down to 750.6, which is a nothing. And we're going to bounce off that. I mean, so if that's our bottom for the morning, that's a bad sign, because it just shows that the 751 and the 750 level, neither of them were respected here. But let's see if we keep going. I mean, I'm not ready to throw in the towel on this down move yet. Did not check what my buddies were texting me this morning. Let's see. What are my buddies up to? Hmm. Obviously, anything inside this range, I'm not interested in. Ugly range right off the bat. Top of it is 753.5 up here. Not a huge fan of a 0.5 top. At least give me an integer, preferably an even integer like 752, 750, 754. Those are clean tops. 753, a little less clean. 753.5, even worse. And then you've got a nasty little bottom down here also at 750.6. You want to see levels being respected. Why? Because levels being respected shows that there's human trading occurring, right? The more humans that are trading, the better your chance of winning, all right? It's like picking the right poker table, okay? You can play at the table where you know there's 8 professional poker players sitting, or you can choose the table where you see chips are flying everywhere, everybody's seeing every hand until the river, and you know there's a bunch of fish at the table, all right? Big difference between your ability to make money at one versus the other. And a market where there is a lot of emotion involved, a lot of human trading occurring, much easier to make money in that market than a market that is low emotion, low volume, low human participation, mainly driven by algorithmic trading, all right? Those markets are tough to make money in. And you can use the market respecting clean levels as a bit of a gauge in how much human participation is occurring in the market. Obviously, if there's big news stories, if there's big catalysts and there's big volume, that's the most obvious gauge of how much human trading is occurring, and consequently how difficult or how easy of a market it's going to be. But another good way to measure human participation is, are we respecting basic levels? You know, the more humans involved, the more major levels are become bottoms and tops and resistance points, all right? Because that's where the human psychology kicks in, all right? Humans see, you know, we've touched 754 before. It's a 2-week high. We're going to respect 754. We go to 754, we touch it, we stop, we go back, we touch it again, we stop, we the level gets respected. You can infer that there is human participation occurring there. I mean, one of the most basic, I don't know what you would call it, not a rule, but axiom, I don't know. One of the most basic concepts in markets is it is a zero-sum game, well, not exactly, but for our purposes, it is a zero-sum game. Every dollar you make is going to be taken off of someone else, especially if you're an active trader. If you're a long-term investor, it's different. If you're a long-term investor, it's not exactly a zero-sum game. It grows with the American economy. But besides the point, if you're an active trader and you're gambling, more or less, which is what we are doing, every dollar you make is going to be taken off of someone else. You have to beat someone else to make a dollar in the market, all right? And it's a heck of a lot easier to make money off of other people than it is off of the algorithms. I think that's should be self-evident. Beating the algorithms is very, very difficult. I'm not sure it's possible for a human to do that, quite honestly. Yeah, I'm not sure it's possible. I mean, they wouldn't keep the algorithms on, right? They wouldn't be 80% of the market volume at this point if the algorithms weren't winning. So I think it's pretty safe to say that the algorithms win. All right? Not all of them. Some algorithms get eaten up by other algorithms, but the best algorithms in the end do win, and they do dominate the market, and they keep them on and running because they're winners. You really don't want to be competing against them. You do want to be competing against other humans. So table selection in the market is very important. And that means waiting for favorable market conditions. Again, let me just say that, those sorts of lessons are why I'm streaming, all right? Not to give you my picks. I show my trades, again, because I think nobody else does it. They want to give you a bunch of advice without showing their trades, and I think that's bullshit. Again, it'd be like some random dude saying he's the best soccer player on earth. But, by the way, I'm not going to actually show you myself playing soccer. Well, okay, I just got to take your word for it. That's what happens in markets and in the financial community in general. Whoever is the best salesman, whoever is the guy who screams the loudest that they're the best. Somehow people believe that, and then they don't actually show you their trades, or they cherry pick them and show you, their trades after the trade is done. I mean, come on. Anybody can do that. Oh, I had this position. I killed this trade. So the point of me streaming is just show it. Show what you're doing. That's all. You want to say you're the best trader in the world? Then just show it. I mean, it shouldn't be that hard, right? Again, you could put a delay on it if you want. Honestly, people copying your trades, it's not like it would be a big deal anyway. I don't think that would help anyone, but it wouldn't hurt you exactly. In fact, people following your trades would theoretically help you. I mean, but yeah, the lessons on what to look for, execution, how to play the market, that's what matters. Give somebody a fish, you feed them for a day. Teach somebody to fish, you feed them for a lifetime. A little cheesy, but I think it's applicable here. People giving picks and predictions, they're giving you a fish. People will talk about process, execution, emotional control. These are the basics. That's how to fish. If it's even possible to win as a retail trader. If you work on Wall Street, you trade for a big firm, you can win. We've seen that before. We know people who have the backing of a bank and work at a trading desk and are surrounded by bosses and colleagues that put rules on their trading and fund them. You can win. You can win if you have an infinite amount of funding and a team behind you. making sure your risk management controls are proper and in place, it's a lot easier to win that way. But can somebody sit at a desk by themselves and do it? I don't know. I really don't. I don't see much proof that it's possible, but I know there's a lot of us trying to do it. So, all right. We're at 753 SPY. Our high for the day was 753.5. Over here, right when we opened. Not a pretty level. Again, this bottom wasn't very pretty. This is a V shape, though. I will say that. And I did want to see a V shape. We did get a nice V here. So, slightly encouraged by that. If we were to break higher, boy. What's your out if we break higher? I mean, 756 is sort of the first thought, but if you look over the last few days, we never even really touched 756. Like, here's the last few days, all right? This little chunk right here is yesterday, I get. No, this little chunk right here is yesterday. This dip and bounce back is yesterday. This little ascending flag is Tuesday. This down move is Monday. This is Friday over here. But if you look back at Friday and yesterday, our high is 755.5. So we never even hit 756. I mean, we didn't even really touch 756 on those days. So is 756 an out if we break higher? I wouldn't think so. I mean, we never touched it. I would think, probably run into a wall at 755.5, right? That's where we ran into the wall those last two times we approached highs. I mean, they're not all-time highs, but so again, if we break higher here, I wouldn't have what I would call a clean target. Yeah, I wouldn't feel like I know where this market is headed. And like I said earlier, I'm sort of working on that. I'm gonna use that basic assumption as an entry criteria. I want to have a clear winning target in mind. Losing target, I mean, look, your losing exit is your invalidation point. That just is what it is. You're always going to be able to find that. What's more important, I mean, you need both. You have to have both. When you enter a trade, you need a losing exit and a winning out. Personally, I think pinpointing what the winning out is a lot more difficult than the losing exit. And we break higher here. I don't have a clear target in mind for winning out. I could say 755, but I think it's a similar situation to what happened down here, where I said 750 and we went to 750.6, 0.7, never quite touched it. So this would have been a losing trade down here. I think it's a similar situation up here where I can say 755, but I'm not sure we'll actually touch that. We could stop at 754. That seems very possible. 754.5 or just some random ass number like that. Again, 756 is not really a clean target because the last two times we broke out higher, we didn't even get to 756. It hasn't 756 hasn't shown any any history of being an important level or where liquidity resides. So yeah, so this little breakout higher, we don't have a clean target in mind. So I'm going to pass again. Unfortunately, like I said, I'm not a fan of this market right now. Probably going to be doing a lot of passing here, and that's the reality of it, you know? It sucks. I'm streaming, so I do feel a slight amount of pressure to sort of put a trade on just to, just to show that I'm trading just because I'm streaming. But you know what? I'm going to resist that urge. No, I'm not going to make... I'm done with the sloppy trades. Took yesterday off, feeling more clear-headed. I don't need shitty trades right now. So there's a very good possibility that this entire morning I don't place a trade. And let me say that as a day trader, and your style might be completely different. I know a lot of traders are option swing traders. I was an option swing trader for many, many years. That's what I did. I had to work with the PDT rule, around the PDT rule. So I traded my options and wasn't really allowed to day trade them. So I swung trade options for many years. So I have to assume a lot of you are doing that. But as a day trader, I'm looking for moves that last. My time horizon, personally, and yours might be completely different, is anywhere from a few minutes to, say, a couple hours, right? That's my time horizon for my trades. And the later in the day that it gets, for me, the more information I have. So I'm basically trying to trade the tenor of the day, all right? How does today feel? Are we moving higher? Are we moving lower? Are we chopping? Are we channeling? Are we pegging to a certain number? Are we drifting? Are we taking the staircase up? Are we panic selling down? So I'm trying to get a feel for what's occurring today. And it just sort of, it's obvious that the later in the day you get, the more information you have about what's going on today, all right? I also day trade because I do feel that the psychology of the market resets each morning, all right? Each day has a certain tenor, but every new morning is a chance for that to change, right? The psychology changes in the morning. I think that makes sense. The psychology can change midday, too. You can have a lunchtime channel where there's very low volatility, and then you can come out of lunchtime at 1 p.m., and the market can feel very different than it did in the morning. It can change midday, too. But I feel like a new day is a natural sort of reset. It's part of why I like day trading over swing trading at this point. But I think swing trading is very valid. I just like the idea of things resetting and trying to get a bead on the market for that day. But you can get a bead on the market for this week, you know? Like, if you were swing trading this last week, we've been drifting higher, right? With a lot of friggin' chop. A lot of chop, a lot of sharp pullbacks, but generally drifting higher. Makes sense going into earnings season. And quite honestly, it seems like the stock market likes this war. It does. At first, it didn't. Of course, it brought uncertainty. It brought higher oil prices. It brought fear and uncertainty at first. But I will say the deeper we go into this war, the more it seems like the market is fond of it. All right? And I don't think that's crazy because guess what? Higher oil prices aren't exactly a bad thing for America or the American economy. We're the top producer of oil and natural gas and all that shit in the world. None of it goes through the Strait of Hormuz. So when all that shit gets blocked in the strait, it doesn't affect all our oil and all our gas. It just makes it more valuable. Plus, you got the defense contractors, you've got the banks and the financing companies. These all benefit off of war. So those are some big dogs, right? We're talking oil, defense, finance. I mean, this is some old money, core stock market shit. So more and more, it seems to me that the market kind of likes this war. How long that's going to last, I don't know. But we're certainly past the stage where you can say this war is bad for the stock market. I mean, we've got, what? How many months of proof now? 3 or 4 months of proof now that it's not that bad for the stock market. We're hanging around the 753.5 level. Not a terribly interesting level. Yeah, geopolitical plays. I don't like geopolitical plays. I find them to be traps most of the time. This one was no different. Geopolitical plays always seem to play out the same way, all right? You get this initial surge of fear and uncertainty that people short. The market almost always pushes back against that and immediately responds positively to fear-inducing geopolitical events. I'm talking about the first few days. Then, after it's punished those initial bears and gotten them to fold their hands, then Wall Street and the institutions, they actually get a little scared. And there's a sell-off. And that lasts for a few days, a week or two. And then you get a surge in buying as everyone sort of realizes whatever geopolitical event occurred isn't really going to affect the American economy as much as people thought it would. That is generally how geopolitical plays go. Now, how they affect the economy long term, whether they cause a crash later, that's different. I mean, that actually depends on how they fundamentally affect the economy. But the initial playbook, the initial string of actions is usually very sort of predictable and, um, yeah, meant to trap you, basically. You get the initial fear, which Wall Street and the algorithms push back against by buying hard into the first couple days. Once they've made the initial bears fold their hands, then they sell off. And a few days after that, once they realize, hey, you know what, nothing's actually changed, a wave of buying comes in. That is how geopolitical plays tend to play out. So I don't trust geopolitical plays for the most part. I do like getting long oil on this particular geopolitical Strait of Hormuz thing, because it seems like higher oil prices are the point here. You know, we're blocking all of this oil and natural gas flowing out of the Gulf. And again, we are the largest producers of all that energy shit. Blocking that strait doesn't affect us. You know, it's not a bad thing for American companies for that strait to be blocked. And that strikes me as probably the point of it, right? All right, you've seen some real shitty action again here. So we broke right above the daily high that was set over here, drifted a little higher, went up to 754, which almost no way to make money on that. I mean, what were you going to do? Catch the 50-cent move? Wasn't even 50 cents. This 40-cent move? Now we're going lower? It's ugly, you know? Well, maybe we'll go up to 755. If it goes to 755, maybe it was playable. But if this is the top right here, that's another sort of ugly top that feels like it was designed to catch people's stops, to induce people to get long, and then they're just going to swing the other way to punish the people who did, which we've been seeing a shit ton of lately. Again, levels not being respected, breakouts are not running, they're just retracing and punishing the people who are trying to play them. So be careful. Feeling a little bad about being such a negative Nelly on all this. Yeah, I said negative Nelly. Yeah, I'm giving you a lot of reasons not to trade. What does this look like to me right now? 10:30 a.m. It looks like one of two things. It's either a BOF day, buy order flow, accumulation day, taking the stairs higher. With a target of maybe 755, 756. So a slow drift higher. It's looking like it might be one of those days. Yeah, I would say with a target of 755 or 756. And it'll take all day to get there. And there'll probably be at least one major pullback over the course of the day. We're talking about a pullback down to 751, at least 752 at some point today. Interesting candle. $755 is also where we closed yesterday. So I do think that's going to be a resistance level. I could definitely see us getting to 755 and then that sort of kicking off the mid-morning pullback. In fact, that might not be a terrible play when I think about it. If we make a run to 755, then shorting it there. Because I don't think this is going to be some sort of strong move higher here. Could be. I don't want to rule anything out, but if it's going to be a drift higher kind of day, and that's what we've been seeing lately, that comes with pullbacks. Usually one significant one at some point during the day. Usually mid-morning, 11 a.m. Not always. You know, it can come later in the day. It can come earlier in the day. But I could see us going to 755 here, coming back down to around this level, which would be 751.5 or so. So 752, 751. Then sort of resuming the slow climb higher with an endpoint of 755 or 756 for the day. That would make sense to me from what I see right here. Very hard to play that. Very hard to make money on that. I mean, you could try and short it if we get to 755 with the thesis being, okay, we touched 755, here comes the pullback. The major pullback for the day. Or you could just wait for the pullback wait till it reaches down here, get long, and then try and ride the afternoon grind higher, which is usually what happens on these days. You get a little more volatility in the morning. You see this pattern play out in the morning where you go up, you have the midday pullback down, and then the afternoon is sort of less. The afternoon generally turns into a grind higher, but once you have that major pullback, you generally don't see another major pullback. You'll get a lot of minor pullbacks. So you wait for a bottom to be put in, you get long, and then you just sort of fasten your seatbelt and try and ride it until the end of the day. That's what I could see happening today. I think that's the most likely scenario. But first of all, I don't feel in any way certain about that. And secondly, again, even if that was to play out exactly as I just outlined, playing it would be extremely tricky. You'd have to have high conviction in the idea of it. I mean, let's say the safest play of all would be waiting for the pullback, then getting long and riding the grind higher all afternoon. It'd be a slow, choppy trade higher. I don't think it'd exactly be a terrible play. It would just be a difficult one to time the entry correctly, and the move higher would be slow and painful. The other play, even less safe than that one, would be, I mean, looking for a short somewhere up here, I'm not saying like right where we're at right now, but maybe. Again, levels aren't really particularly being respected here. So do I think we're going to go right to 755 and stop? Maybe, but we could go to 755.5. Off chance we go to 756. I have a hard time seeing that. Or we could be at the top right now. Again, tough entry. And where's your winning exit? 752, 751.5, 751. I mean, here's 752. Here's 751.5. Here's 751. I mean, 751.5 in that area seems like it would be a good winning exit. I mean, if you're feeling bearish, $752 would be the safer exit. So I'd probably take that personally. But again, the entry is difficult here. Are we at a top? Is 755 the top? Is 755.5 the top? What has been working lately is waiting until the end of the day. And usually by 2 or 3 o'clock in the afternoon, you can sort of have an idea of the shape of the day and, more importantly, the center of gravity of the market, all right? Where the market has been pulling towards all day, all right? Yesterday it was... Let me refresh my memory here. Yesterday was 753.5, right? We were pulling towards that all day. So at 2 o'clock here, you could have shorted it, played the pullback to 753.5. It went down to 753. Now, at the end of the day, we wound up rallying up to 754, a bit unusual. But you could have shorted this with the assumption that we're going to pull back to 753.5 because that's where we had been centered all day. Now, as you can see, at 3:50 p.m., we were exactly at 753.5. Again, the action here was at 753.5. The action in the morning was centered around 753.5. The last 10 minutes, we made a steep climb. But the play really was here. It was 2 p.m. We were at 755. We were a point and a half away from center. You could have shorted it there, knowing that 753.5 was the liquidity node, the black hole where the market was pulling towards. Then once we got down here, right around 753, I mean, you're not going to play it because we're at the node, and this entire last move higher, that's just noise. So it's not a bad idea, and honestly, I think if I am going to put a trade in, that is the most likely opportunity that I'm going to see. Now, if we look at today, you can see we're already sort of forming the same. 753.5 is, again, it was a resistance level here. The morning action centered on it. You can see the volume profile. Again, 753.5. That is where the liquidity is hanging out. So, I don't want to mess with it too much in the morning because in the morning you can dance around it and get some sort of wild swings around it. You can go at least a point above or below it. Now look here. So this is kind of neat, is that 754.5 is where we topped out. So exactly 1 point above the liquidity node. When you have these pegs, the market tends to gyrate 1 point above or below them, right? So 754.5 would be a top, 752.5 would be a bottom. That would be 1 point above or below our center of gravity at 753.5. But in the morning, the swings tend to be a little bit more unpredictable. Later in the day, like I said, 2-3 p.m., if we're a good distance away from the center of gravity, you can put a play in to pull us back towards it. That might well be the play I end up making towards the end of the day. And it does look so far like the liquidity is hanging out in the same spot it was yesterday. A lot of wrong, a lot of waiting. That's trading. LW, LW. A lot of wrong, a lot of waiting. If you're doing a lot of waiting, you're probably doing it right. If you're doing a lot of wrong, hard to say you're doing it right if you're doing a lot of wrong. But it does happen. Approaching that 754.5 level again. Let's see if it's a barrier. Even if we break through it, which I'm not sure we will. Again, where do we go? We're 50 cents away from yesterday's close. It's our red-green line where SPY goes from red to green. Usually a resistance level. That's at 755. 755 is a natural resistance level. So I'm not sure how you could play getting long here. Reaching for 756, but 756 hasn't shown any significance. Yeah, to me, honestly, I'd be more tempted to short it here than get long here. But I'm not going to do either one. I don't have a winning out if I'm getting long. I don't have a good entry if I'm getting short. I mean, you could get short here with a 755 exit. You know, you're losing eggs at 755. You could wait until we get to 755 if we're going to touch it. Get a little better math on the whole thing. Frankly, I think that's more attractive than getting short here. I mean, you could get short at 755. Put your losing exit at 755.5. You're winning out at 752. I like that play better than getting long. But I don't like it enough to make it. I wish this top here was a little cleaner. If it was a clean top, I'd be a lot more interested in getting short here, but it's not really. I mean, you've got this. These candles are kind of creeping a little higher. Then you got this one a little higher. If this was a clean top, you could get short here with an exit, right at the top of the clean top. But it's not a clean top. It's a creeping, weird top. And again, you get short. What's your out? 752.5, 752, 751.5. Any of them sound valid to me. Honestly, if you're playing it safe, you're trying to hit singles, 752.5 is really. Which would be right here. That would be your cleanest exit, your safest exit. I'm thinking about it. I am. This trade is going to pass me by while I think about it. All right. I put a limit order in, a sell limit. If we touch this, I'll take it. Just because of the risk reward, and this little candle here makes me more interested in it. Could have just taken it a couple ticks lower. Could have just taken it a couple ticks lower. If I miss it, I miss it. I'd rather have a good risk reward than a shitty entry. Ah, fuck. I missed it. Well, if I was in it, 752.5 would be my exit. Right here. This would be my exit where the cursor is. Oh well. Should have set that sell limit order a couple ticks lower. Don't want to leave that open. Mm-hmm. Putting it back in there. Yeah. All right, it took it this time. I'm going to set my stop loss close. Turn my macro on. Give myself a little more room than that. That's a good out. All right. Ended up taking that trade for a way worse price than I should have. Anyway, risking $26 to win 65. I'll take it. Execution here was pretty sloppy. Pretty sloppy. Yeah. This is not the prettiest entry that I've ever executed, that's for sure. Wish I was getting short here instead of down there. All right. All right. I'm not quite done with this one. Let's be serious. Honestly, I think I just wanted my entry to look like it's up here. It makes me feel so much better just having the entry up here. I know that doesn't make much sense, but for whatever reason, I like it a lot better. I can set up like a really nice risk reward here. Something that looks pretty. Look at that. Now that's a pretty trade, right? Risking $15 to win 89. Much, much better looking. Had to lose the initial trade to set that up. Sloppy shit. But this trade is actually a pretty good one. All right, obviously this should have been the initial trade. What can I say? I'm human. Should have just waited, kept my limit order in here. Instead, I had a sloppy entry down there, which I had to lose in order to actually set this one up. But this one looks a lot prettier. It does look pretty. All right, here comes the test. We're going to break through this level or no? 753.3? Well, I guess it's a 753.5 level. This is our liquidity center. Sort of counting on us swinging to the other end of the center of gravity like a slingshot around the moon. Or we could just bounce right off it. Could just take the win at 753.5. Tempted to just take the win at 753.5. Don't do that. That's not the trade. My out is set at 752.6, really. I always like to be a shade above where I actually think the exit is. 752.5 is what I think the exit is, so set it a few ticks above that. Come on, we gotta break through this level. Push through. Don't quit. That's it. No. That's it. Good. This candle's a good sign. Does it ensure that this trade's going to win? No. But it substantially increases our odds. A little pissed off on my entry here. I mean, never satisfied. I mean, I'm starting to talk like the trade has already won, which is actually a pretty good sign. Usually when I start talking like that, it means I'm fairly fucking confident in it. But I am a little miffed at the sloppy entry. I mean, I had an opportunity to get in here I could have just set my limit here and left it. Instead, I did probably the worst option of all, which is entering down here. Maybe here. Anyway, the entry probably cost me, let's say, $10 to $15 in expected value. Thinking about whether I want to move my losing exit lower here. Since we had this down leg, does that change my invalidation point for the trade? Not really. I mean, not as I see it. Realistically, what do I think invalidates this trade? Honestly, I would think it's right here. But what the fuck's the difference? It's $5. Yeah, it's $5. I don't see the point in moving it. If we take another leg lower, I will move the losing exit downward. Just because I don't... Why? Is my logic solid? Yeah, it is. If we take another leg lower, it will move the losing exit lower. Because we're at that 753.5 area. We've dipped below it now. I mean, the thesis is we're going to shoot past the center of gravity by 1 point, which is what usually happens. But if we shoot past the center of gravity by, say, 0.7, you know, it could stop there. And I don't want to swing all the way back to a point above the center of gravity to say that I was wrong. Center of gravity being 753.5 here. But usually these things gyrate 1 point above to 1 point below. Which is how we get our 752.5 exit here. This is 753.3 here. Ugh. I'd hate to see us freeze up there. I mean, that wouldn't be completely illogical for us to stop at 753. How much space do I want to give this top rate? There's always the idea that I just shouldn't move my outs at all. You know, period, end of story. Now, I don't move my winning out, but I do tinker occasionally with the losing out. Yeah, I don't like moving my losing exit here. Not yet. I don't like moving it yet. I really don't. Again, it's only $15, and could I see us swinging back up to here and then going down again? Yeah, I could. I don't think a move up to where I entered would invalidate this trade exactly. All right, this is 753 on the nose. Now I want to move it a little lower in case 753 is a bottom. So let's turn it into a free roll. Not much, but I've moved my losing exit from losing $15 to winning $5. Now, if that move somehow fucks me, it's going to be an important lesson. Like, if we somehow touch this, but we don't make it to up here, and then it ends up being a winner, that might well change my idea about moving exits at all. Maybe I should cut that shit out. I do like to, like I said, when we get close to my winning out, I like to change the invalidation point to reduce the risk. But more and more, I'm questioning whether that's wise or not. Whether I should just lock the exits in at entry, and that's that. Boy, I don't like how we tapped 753.00 exactly. Now we're bouncing. Whatever. These outs are set. $753.5. This is where I would want, the up move to stop at the liquidity node. I really don't want to see us stall again down here. 753 was not my out. Shit. I definitely might be being overactive with my stops, my exits. Like I said, I don't move my winning exit. I mean, so I tend to think that I'm not overactive with them, but more and more I'm thinking, should I be moving them at all? Ever? I mean, just lock it in, right? You initiate the trade, you put your exits in. That's that. Don't fuck with them. Honestly, the more I think about it, the more that sounds correct. On the other hand, I can make a case that, when you approach a winning out, say we're down here, I'm up $70 on the trade. I'm trying to reach for another $15, right? If my losing exit is all the way up here, the risk reward when we're down here is I'm trying to make $15 with a risk of I'd have to give up the 70 I earn plus the 15 that I would lose. So it would be $85 risk. You understand what I'm saying? So as you approach your winning eggs out, the math does begin to change. Your risk reward begins to skew against you. You're risking large amounts to win a small amount that's left on the trade. I mean, mathematically, that makes sense to me, but is it right? I like to use the basketball analogy, If you're betting basketball games, you tend to bet the game until the buzzer ends, right? I'm betting on which team will win when the game is over. when you start moving your outs, what you're doing is, say your team is up 20 points with 7 minutes left, right? You're giving yourself a chance to cash out for slightly less, right? So instead of taking my full winnings, I'll take 80% of them right now on the chance that my team might lose this game. That's really what you're doing when you move your outs, which makes it sound like a shitty idea. In fact, fuck that. I'm not going to do it. Let's just keep our exits where they were. Just let the trade play out. It's a $20 difference. So this is where I had it set. Is it going to touch it? This is a nasty candle, by the way. What the fuck? Shit. Bad sign. Just touched my my modified out. We're just gonna go straight up, okay? I'm thrilled about this move. Really happy about it. Motherfuckers. Hmm. Trying to pull some lesson away from this trade. I mean, if it ends up winning, lesson is pretty simple. Stop fucking with your losing exits. Just leave them in place. If it ends up being a loser, what's the lesson? Next time, move your losing exit. I don't know. I hope I win this one, because if I win this one, it's not even about the money. Well, a little bit about the money, but like I said, there's a very clean lesson here if this trade ends up winning, and that is stop moving your outs. Period. End of story. And I think I can pull that lesson away from this one, and it's a good lesson. I'd like to sort of solidify it in my mind. Because deep down, I think it's right. But if I end up losing this one, it's going to be... I could have moved my losing exit much lower. I could have taken $40 profit on this trade. Why didn't I? And that's going to be a much more murky basket to deal with. Anyway, down here, 753, where we hit resistance last time, is the problem. Are we going to stall there again? If we do stall there again, do I want to move this exit down to here? I'm always trying to simplify things and systematize them and codify them. By far the easiest answer is just do not move the out. Don't move it. I mean, as we can see from this down move, setting it up here was at least somewhat correct. The simple answer, the clean one, is don't move them. Trading gods, though, please give me a sign that that's the right idea by letting me win this trade. That will reinforce that I should not move my exits. If I lose this trade, it's going to be much harder to digest. Come on. Which way we break right here could be the deciding factor. No. No. Go lower. Don't go higher. No, no, no. Go lower. No. Don't break higher here. Shit. Shit. Ugh. It's not. I don't like that candle. This is why I don't watch it tick for tick. I don't like that candle, but let's not put too much weight on it. Good. A little lower? Another good reason just to set your exits. You start seeing things that aren't there. Well, either way, this trade is going to win or lose. It's going to decide my morning. I mean, it's going to eat up the whole morning, obviously. But again, this is the reality of it. Those guys posting $10,000 wins and even $4,000 or $5,000 days. I mean, I really have a hard time seeing the justification for that. There's only two scenarios where that makes sense to me. Number one, you're actually a profitable trader. Kind of know how I feel about that. I'm not sure anyone actually is. Number two, you're kind of new to trading and you think that you've had a good run. You think you're a profitable trader because you've had a good run. So maybe that justifies larger size. I've reached a point where I'm trading one contract, the minimum size, and I don't feel any need to increase that until I show consistent profitability. Why would I trade with anything more than the minimum? Frankly, I think every trader should think that way. I know it's not a really popular opinion, but until you can consistently show that you're a winner, you should be min-sizing everything. There is no need to play bigger than the minimum. So that's why I trade one contract, and I'm content doing that. Now, if there comes a day where, after 2 or 3 months, I'm showing win after win, I'm winning 3 days a week. End of each week is a green number. I'll increase that size. But until then, it doesn't make sense to do so. And again, this is the reality of it. People want to post their huge numbers online. Congratulations, you're going to go broke. But the reality of trading is a lot less cool, a lot less glamorous. It's not I win $30,000 every day. It's just not like that. It's really not. Anybody who's doing that is either full of shit or they're going to be broke within a month. Straight up. The reality is waiting for trades, grinding out $50, $100, minimizing your risk, minimizing your losses until you've got a system in place that you can fully trust, have full confidence in. Anybody winging it with $10,000 days, they're not going to last. They're just not. They may hang around for a month or two, but you're not going to last swinging lines like that. Stick to the minimum. Stick to the minimum until you string together at least a couple of months of really consistent profitability. Till then, no point. No point. And as you can see, this is not particularly fun or exciting. You don't have a boss. That's nice. But we all have bosses, don't we? Getting philosophical here. Yeah, not having a boss is cool. But other than that, people online showing you, they with their calendar, with the 4-digit, 5-digit numbers every day. That is just such a crock of shit. Sorry. I don't believe anyone who posts numbers like that. I don't care who you are. Show us the tax return. That's what I say. Show us the fucking tax return. To me, that is the arbiter. That's verified, okay? People want to talk about verified. Verified is the tax return. Period. End of story. It's very simple. I mean, here in the US, we have a way to track how much money you make. It's called your tax return. Yeah, that's what I would say. There's two ways to be verified. Show your trades live, like I'm doing, or post the tax return. Anything other than that can be manipulated, can be full of shit, and believe me, there's plenty of motivation to do so. Some guy posts fake numbers. He can get a bunch of people to sign up for courses, for newsletters. Now he's making real money, not trading money. He's making actual income off of other people. So there's plenty of motivation to lie about it. Especially if you're an unscrupulous, shady-ass dude. And, I mean, I know people in finance are generally seen as paragons of honesty, but come on, let's be serious. There's a lot of shady motherfuckers out there. If all they have to do is, do a little Photoshop on a fucking calendar, not hard to do. I could do it. Would not be hard for me to tomorrow rebrand the channel, set myself up as the guy who makes $5,000 every day, who has figured out the stock market. By the way, it's going to cost you $1,000 to get a coaching session from me. Wouldn't be hard to do. Be a lot easier than this shit. Tell you that. It's a lot easier than actually trading. In fact, I should. Why the fuck am I doing this? I don't know. I value honesty. Anyway, yeah. Anybody trying to sell you anything, tell them you want to see one of two things. Show their trades live or show us the tax return. Now, mind you, there are traders, like I said, there's traders on Wall Street who have made a lot of money, but they are on Wall Street. You have a team behind you, you have a boss, you're funded, you have insider info most likely, you have a set of rules, risk management principles in place. If you work at a firm, that's different. You can make money trading. You also have to graduate from an Ivy League school. I mean, that's the funnel, right? Ivy League to Wall Street. Tap that 753 number again. Fuck. and we're going to bounce right off it. Shit. Could have taken that out. F. Should I have taken that out? I'd like this trade to resolve before I have to go do chores. But it may not. That 753 wall is pretty discouraging right now. Fuck. Okay, now, if we go back down to 753, do I just want to get out of this trade? Not really. No. That's not what I want to do. But now 753 has become like 753 has become a level now. I mean, we break below it, it's almost like do I want 752.5 to be my out at this point? I mean a break below it would actually seem fairly significant now. Ugh. It's tricky. We haven't had our major pullback yet, you know? Like I said earlier, if we're going to creep higher today, we could have a major pullback. Whatever, if I'm going to stick to my out on the losing side, I should stick to my out on the winning side. Although I will say a break below 753 at this point, now that we've touched it 3 times and gotten pushed back, maybe even a 4th time if you want to count back here. A break below 753 does seem significant. In fact, oh God. I could just set my out up at 753, exit this trade if we touch it again, set up a new trade if we break below it. What becomes your out? I don't... 751.5. 751? No. I don't have a clean out if I were to do that. If I were to set up a new trade when we break below 753, I don't have a target in mind. 752, 751.5, 751. They all look just as good to me. So I'm just going to stick to the plan. Stick to the out. Stick to the outs. Stick to the outs. That's it. Stick to the outs. Let's see. Is it 100 fucking degrees outside today? 92. 92. Okay. Well, this is it, folks. This is why I stream. To show the reality of it. Not taking pictures on a boat in the Mediterranean with my iPad saying that I'm making $30,000 today. And then diving into the sea. Come on, seriously? It's bullshit. This is what it looks like. Sitting around, waiting a long time to even enter a trade. At this point, waiting even longer for the trade to actually play out. And when it does play out, I'm either going to win $80 or lose $15. That's day trading. That's actively trading. If you're doing it right. Yeah, if you're doing it right. Which is minimizing risk, minimizing size, standardizing your trades, waiting for proper setups, discipline, execution, emotional awareness. These are the steps to successful trading, not I just won $50,000. Even if it is true, it is not sustainable. How many super wealthy people do you know in real life that actually trade? Not on social media, not people you specifically know because of trading, in other words, gurus or coaches, actual people like your neighbors, your friends, people you have met in real life who are wealthy from trading? I already know the answer. It's zero. I bet you know probably a handful of people who are wealthy from real estate, for instance, right? Or they work in finance, right? Or they're a doctor. These are wealthy people, all right? People who invest in real estate, people who actually work on Wall Street, doctors, high power business people. These are actually wealthy people that you've met and interacted with. How many people have you met and interacted with who are, oh yeah, I've got a lot of money. I bought this house with my trading proceeds? Zero. So just be careful. Be careful of who you listen to. Yeah. Anybody telling you they're making millions of dollars trading is either completely full of shit or just really starting out in trading and got lucky, and it's just a matter of time before poof. You want to grind it out? It's slow, it's boring, it's not exciting. You won't be taking pictures from a boat or on an airplane. Anybody taking pictures while in some sort of transportation vehicle and talking about trading is not a person to be trusted. This fucking trade. Oh boy. Okay. It is now noon. I should just move my exit up because I don't want to be in this trade anymore. Seriously, it is wearing down my patience. I have other things to do than watching this shit go back and forth. Mustard shit. Digits. $753.1. Do I take it? Do I take the out? Should I take the out? Probably. I set my outs, sticking to them. Oh man, 753.0. This is it. Come on. Goo. going, you motherfucker? Don't touch the outs. I'm not going to touch the outs. You know what? I'm done moving my losing exit. Not doing it. Not going to fucking do it. Oh, baby. Yes. Yes. Winner. First winning trade in 76 fucking days. Expertly played, if I say so myself. I mean, really just a clinic on everything related to trading, you know. Just setup, exits, execution, discipline, control, bankroll management, just the whole thing. Well done. Anyway, we did break below 753, which, as I said earlier, had sort of formed a level. You know, is it significant enough to make a play on? You know, we showed a little momentum below it. I'm not interested in it because, like I said, I don't know where my winning out would be. If you wanted to make a play on it, I mean, you could say 750, you could say 751. You could say 752, but if it's 752, you really wouldn't make that play because there'd be no real reward. So yeah, I don't want to make it because I don't know where my out would be. I already had a play in, and there was another reason. Oh yeah, I don't trust this market. I don't. These breakouts below levels have been fake outs too often lately. 753.5 does seem like a center of gravity to me. Again today, it was yesterday. Seems like it again today, although maybe it's 753 instead of 753.5. Either way, it's in the 753 to 753.5 range. That seems like the center. And the market lately has been pegging towards the center. When I say pegging, I mean instead of moving directionally, the market seems to be constantly moving back towards a peg. All right, a certain number. So that's the kind of market we've been in. I'm assuming, again, today we're still in that kind of market. Instead of a directional market, a pegged market. And that peg would be 753 to 750. So when we break out down to 752.5, I don't trust that we're going to make a directional move lower. You know, we might just go right back to the peg. With that said, I do also think, like I said, usually mid-morning there's a significant pullback followed by an afternoon climb that is much more steady. As far as I'm concerned, though, I caught the mid-morning pullback with that last trade. That's what my trade was. So my out was right here. Looks like a pretty good out right now. Yeah, so I caught the mid-morning pullback. Maybe it goes deeper. Maybe it doesn't. I don't have much interest in catching it beyond what I did. And if this follows the pattern that we've been seeing, you'll get a mid-morning pullback. I don't know how deep it'll go, although it's really just afternoon, lunchtime now. This may be the bottom. It might not be. Maybe we go down to here. And the afternoon generally has shown a more consistent sort of climb, you know, you'll get a bounce off the pullback and then a climb and sort of a grind higher, less volatile than the morning, just more sort of steady. You'll still get pullbacks, but probably not big ones, while we grind higher. And then at a certain point in the afternoon, maybe say 3 o'clock, give or take, maybe you get a retrace back towards the center, the peg, which again looks like 753 to 753.5. That would be my take on what's happening today. It was my take all the way back here at 10:15 a.m. To me, it sort of looks like it's still playing out. You know, we got our little morning move higher. Now we're getting our pullback. And then generally, you bounce off the pullback, you grind higher during the afternoon, followed by a very late retrace towards center. This is what we've been seeing. That would be my take on today. So yeah, I've got shit to do. Generally, I don't want to trade during the lunch hour anyway. Yeah, that's my take on it. Could this down move go lower? Yeah. Could it turn into an all-out sellout, you know, selling festival, whatever you want to call it? Yeah, I mean, it could. Anything can happen. But my take is we'll get a pullback. Maybe this is the bottom. Maybe it isn't. Then we're going to move higher through the afternoon, followed by a late pullback towards center. If I had to guess. But that's what I see right now. Maybe I'll come back on later if there's anything worth looking at. All right. Potential shift here, guys. Good luck.